Welcome guys to another weekly update. So today I will share with you what I'm expecting next for the Bitcoin. We will start on our daily time frame as always. So if you turn on our previous monthly levels, we can see that the previous monthly high was taken out right on the tick, so we get that swing failure pattern of that high right here, and we get a nice drop to the downside. That was like the 10%, yes, 10% drop to the downside. And for right now we get a nice swing failure pattern from that low, right, because we didn't get any daily close below that low. So potentially we can see for the next week to get that continuation to the higher prices, but I would wait for another drop to the downside to take out that low right here. So to get something like that, right? So if we say that is the daily candle, if we get that drop to the downside, I would be interested to take that long, but we need to be aware of the daily candle close, right? Because if we get that daily candle close above that low, below that low, then this is the breakout structure and we can expect lower prices to come. And if we get that daily close above that low, then this is a potential swing failure pattern, and then we can expect some higher prices to come. For right now, the 63k is for me the last strong support, because we have the single print zone right here, and we have a previous supply zone. So in the same zone we have the single print zone, previous supply zone, and also we have the naked weekly value area low. We will talk about that right in a second. But if we turn on our lower time frame range, we can see that we have some mini range right here. If we turn on all levels right here, if we just take a look on that market structure right here, we can see that we have one range right here, then we get that failed auction of that range low right here, and then we have another range right here, and we get that breakout of that range retest, and we have another mini range right here. So we can potentially see that continuation to the higher prices, breakout of that range high, and then to take that all-time high again, and to see maybe some drop then to the downside, right? But like I said, I would wait for another drop to the downside to get that swing failure pattern of that low. And if we turn on our lower time frame range, we can see that we have the the 1.25 right here. So this is the Fibonacci range, the failed auction. So if we turn on our higher time frame Fibonacci range, we can see that we get the failed auction of that range low. When you get the failed auction of the range low, then you expect the failed auction of the range high, right? So like the rangers. So if you take out the range low, then you expect to take out the range high, like here. So we get that impulsive move to the upside, one touch, then you take out the range high, get the swing failure pattern, and then you expect the range low to be taken out. So the same is with the failed auction. If you get the failed auction of the range low, then you expect the failed auction of the range high. But for right now, like I said, if we get that drop to the downside, if we get that swing failure pattern of that low, I would be aware. If we get that, I would be aware to get that daily close above that low. So this is then the sign that we get the swing failure pattern, and then potentially we can see that continuation to the higher prices. If we hide everything for right now, just a second, and if we jump on our periodic volume profiles, we can see that we take out the previous monthly value area high. When you take the previous monthly value area high, then you can expect the full rotation of the value area. So if you take out the previous monthly value area high, then you expect the value area low of the previous monthly, right? So for right now we lose that previous monthly point of control, so potentially we can see that drop to the previous monthly value area low, and then maybe that continuation to the higher prices. But like I said, the 63k is the last strong support for me, because we have the previous supply zone right here, and we have that single print zone. So if we get that drop right here, I would be aware if we get a nice rejection from it, and I would look for the lower market structure. So if we take out the high, then I would look to get some entry right here, and then to look for the stop loss to be right here. So if I just show that, so if we get that pullback, then stop loss need to be below that low, and then you potentially can aim for the highs to be taken out. But like I said, if we get a nice swing failure pattern, from that low, I would be interested to take that long. But like I said, you need to be aware of daily candle close to get. If we get that drop, you need to get that daily close above that low. So then this is the sign of swing failure pattern. And then you can potentially aim for the for these highs to be taken out. So for right now, when we get that drop, we get the swing failure pattern of that low. So this is the potential long setup. You can, it is a potential long setup because we have the CME 50 and CME SMA 100 and the SMA 50, and also if you take that VWAP from the start of that impulsive move to the upside, you can see that in the same zone is VWAP. So this is a really nice strong zone. So if you get next week that push to the upside, and if we take out that, if we get that push to the upside, and if we get that daily candle close above that high right here, so I would be interested for another pullback and to aim then for the higher prices, right? So if we get on the lower time frame something like that, I would be interested to take that long. So that would be my entry, stop loss, and then to aim to take out the all-time high, or at least to take out that high right here. So that's it. I hope that you enjoyed, and see you next time. Bye.